Learning Objective 5. Prepare a planning budget and a flexible budget with more than one cost driver. In our real life, it's unlikely that all variable costs within a company are driven by a single factor, such as number of units produced, labor hours, or machine hours. In Larry's lawn service case here, that's lawns mowed. More than one cost driver may be needed to adequately explain all of the costs in the organization. The cost formulas used to prepare a flexible budget can be adjusted to recognize multiple cost drivers. Let's take a look at budgets with multiple cost drivers using Larry's case. Because the time required for edging and trimming is different for different lawns, Larry decided to add additional cost driver hours for time required for edging and trimming. So Larry estimated additional hours and developed a new planning and flexible budget, which includes a second cost driver in both his revenue and expense budget formulas. This is a planning budget with two cost drivers. In addition to number of lawns, Larry added one more cost driver, number of hours spent on edging and trimming. Planning budget is prepared based on planned level of activity. Here, 500 lawns mowed and 100 hours spent on edging and trimming. The new revenue formula is $75 multiplied by number of lawns, Q, plus $25 per hour. Total revenue would be $40,000. For expenses, the new cost formula for wages and salaries is $5,000 plus $29 per lawn plus $25 per hour. Gasoline and supplies, $8 per lawn plus $6 per hour. And equipment maintenance, $2 per lawn plus $2 per hour. For other expenses, they're fixed. Total expenses here, $34,300. We subtract total expenses from revenues and we can get net operating income, $5,700. Moving on to flexible budget with two cost drivers. The flexible budget is based on actual level activity. Here, 550 lawns mowed with 100 hours spent on edging and trimming. Following the new revenue and cost formulas, we can get total revenues and variable expenses respectively. Fixed expenses are constant and will not change. We subtract the total expenses from revenues and we can get net operating income for a flexible budget should be $7,500. Both the new planning budget and flexible budget should result in more accurate budgets and variances because they're prepared based on more than one cost driver. Learning Objective 6. Prepare a performance report with more than one cost driver that combines activity variances and revenue and spending variances. This is a combined performance report with two cost drivers. Planning budget and flexible budget are same as previous slides. The differences between planning budget and flexible budget are activity variances. We can see here, activity variance for revenue is favorable. Activity variances for variable expenses are unfavorable. No difference for fixed expenses. The overall net operating income reported on flexible budget is greater than that reported on planning budget. For actual results follow actual number of lawns mowed, 550, and actual number of hours spent on edging and trimming, 100 hours. The differences between flexible budget and actual results are revenue and spending variances. Here, revenue variance is unfavorable. Most spending variances are unfavorable too. Overall, net operating income is lower than expected for actual level of 550 lawns mowed and 100 hours spent on edging and trimming. This is end of chapter 9.